Well, it's official. The Nasdaq Composite Index is now entered in a full-on bear market, down over 20% from its all-time highs that it reached in November of last year. And based on current market trends, it doesn't really seem like we're going to be seeing any concrete signs of market reversals in the near future. In fact, things would very much suggest otherwise, considering what's going on in Europe right now and subsequently the price of gasoline skyrocketing to levels that pretty much just want to make you stay home instead of burning what's quickly becoming liquid gold. And actually, things became even worse this week with the US officially banning imports on Russian oil, which of course is going to lead to further price increases here, and the same also applies in Europe, which many countries have also decided to do the same. And you know, realistically, this just couldn't have happened at a less opportune time, considering that we kind of are just starting to get out of the devastation caused by the pandemic and all of that quantitative easing, but we'll circle back to that later. Right now, this is definitely causing the stock market to experience a brutal beating, specifically anything that has to do with tech rather than energy and consumer defensive products, as investors are seriously prepping for the worst that could definitely happen over the next couple of months. Now, personally, in my own portfolio, I am quite tech heavy. So of course, considering what's going on in the markets right now, my positions like Facebook, Shopify, Amazon, and others of that nature that I'm long on are getting a brutal beating in the short term. But if you've been following my channel since, after the 2020 recession, chances are this might be one of the first times that you see a large material pullback in the stock market from a broad standpoint. So considering how many people were reaching out to me asking for my thoughts, well, I wanted to quickly share my thoughts in today's video. Hey, what's up everyone? It's Griffin here. So by the way, it's been a little while since I made a stock market update video, but I've just been crazy busy with my real estate business, as well as I'm developing a full-on real estate investing course with other investors in the region, as well as a realtor. So I've just been really busy. It's been hectic around here, but for the stock market investors on the channel, I haven't forgotten about you. All right, so let's first start off though with getting a little bit more context about what's going on. So it's important to first remember the fact that really over the past 18 months or so, the stock market was very much in a state of euphoria where week over week, month over month, we were just seeing new all-time highs, reaching levels that just seemed to go higher and higher and higher over the course of 2021. Honestly, it was kind of like witnessing an unstoppable train, it seemed like, reaching all-time highs seemingly every week. And of course, we spoke about the absolute possibility of seeing a rougher market correction over the course of 2022 multiple times on the channel. Yeah, in fact, I even made a video a couple months back titled fully the 2022 stock market crash. And of course, I don't have a crystal ball and it's impossible for anyone to accurately predict this, but based on all of the data presented to us and the current economic environment over the past year, there were definitely signs leading to an upcoming recession, quite possibly in the market. Now, that being said, back in March of 2020, although we were technically in recession territory with the S&P 500, that was down over 20%. This was the quickest recession in history, followed by, well, the quickest recovery. And my overall thoughts about this had to do with the fact that it was somewhat of an artificially induced stock market crash. It wasn't necessarily a true stock market crash, where in the face of complete uncertainty, the fact that the entire economy was basically shut down, this of course inevitably led to a stock market crash in the short term. Fast forward almost 2 years though, and again, we've seen a stock market rally that's basically unprecedented following such a rapid recession. But this was pretty much induced by all the money printing we've seen over this same period, as well as investors just looking to park their money somewhere in order to make a return on investment. Oh, and by the way, this really is one of the reasons why I have become increasingly interested in crypto, but specifically Bitcoin over the past, 6 months to a year, due to its hard money qualities. This really is something that I believe will help contribute to Bitcoin continuing to be a viable hedge against inflation longer term, and also just a great investment class to hold in your overall portfolio over the next decade in this unprecedented economic, but then also monetary period in North America. Okay, now I definitely haven't been shy to speak about truly how difficult it has been as a retail investor over the past 6 months to allocate capital with confidence, right? On one hand, just holding cash is basically exposing you to, of course, the wealth crippling principles of high inflation right now. But then on the other hand, while investing in the stock market, we've been seeing extremely high relative valuations in contrast to historically in the stock market. So that's definitely something that a lot of people have also been weary of. And then the real estate market is another question, right? Where we're seeing prices skyrocketing, and this makes it even more difficult for everyday investors or new first-time home buyers to get into the market and just have their foot in the door. Meanwhile, crypto has been basically in a bear market over the past 6 months. So overall, as a retail investor, trying to find anywhere to make a return on investment has of course been difficult. Now, when it really comes down to it though, what I've personally been doing is really just the principles I've been speaking about for years. So in terms of savings, I personally just maintain my emergency fund. In my case, it's a year's worth of expenses, even though that is somewhat excessive. Stock market investing, I try to continue dollar cost averaging on a month-to-month month-to-month basis into my broad market index funds, and then also the companies that I have the most conviction in over the long term. Again, I'm not looking to day trade. I'm not someone who's trying to trade and time the market. I'm really looking for that longer term investment horizon, right? I'm 25 years old, so it really just doesn't make sense for me to go in and out of positions in the shorter term without seeing my overall thesis play through and these companies actually having the time to grow, right? For example, looking at like Amazon, that's down, I think, over 20%. Do you really think that Amazon is not going to be a company that will completely thrive over the next 10 years? Of course they will. So yes, I am looking at these companies and keeping an eye on them to see, when the market is going to stabilize and when some of these companies are going to be in better value territory. But of course, just maintaining my long-term view on these companies is something that I'm maintaining. Now, when it comes to crypto investing, I'm accumulating Bitcoin and ETH. I have a cryptocurrency miner that I mine ETH every day on, and then also Bitcoin. I've been buying a couple $100s a month without even looking at the price, because right now I believe we're in an accumulation phase and I'm looking to hold it for at least 5 years in the future, probably longer at this point. And then finally, real estate, I only approach deals where I know that from a business standpoint I'm going to be able to actually appreciate the property myself through doing renovations and then actually viewing this as a business rather than a speculative investment. But hey, you know what? This would actually be a great time to speak about today's video sponsor, Moomoo. And despite the fact that the overall stock market is down right now, Moomoo wanted me to convey the fact that they are upping the rewards for new accounts. If this is the first time that you hear about Moomoo, they're a trading app that offer an unparalleled number of features that are just built right into their trading application, including things such as free level 2 US market data and commission-free trading for US residents. They also have real-time market quotes for all of your favorite stocks and cryptos, in-depth company financial data that's displayed in easy-to-consume visual graphs, as well as a bunch of other things like short selling data that's updated daily, and even access to IPOs and trading hours. All of this on an easy-to-use mobile application at no additional cost to you. And for a limited time between March 4th and March 31st of this year, Moomoo's offering a new promotion that's seriously higher than I've ever seen for new signups, where they're going to offer you up to 5 free stocks, each valued up to $3,500 a piece, plus 1 guaranteed share of NIO, the electric car company, if you use my link down in the description. This means that by depositing only $1 into your Moomoo account, you're going to get guaranteed 3 free stocks. And if you want to take it one step further, by depositing your first $2,000 in your Moomoo account, you're going to get an additional 3 free stocks, also each valued up to $3,500 a piece. So all in all, you can get up to $17,500 worth of free stocks when you deposit up to $2,000 in your account, and you're also going to get that 1 free share of NIO. So bottom line, if you want to take advantage of this new promotional offer from Moomoo, make sure to use my link down in the description to sign up and create an account. All right, getting back to the video, let's speak a bit more now about oil prices, because ultimately this is going to be an important factor in what's to come this year in the economy, but then also, of course, the stock market. So based on historical data that I was able to gather, well, over the past 50 years or so, basically every time the price of oil that is, yes, adjusted for inflation, rose 50% above its trend, a recession followed, which is what we can see from this chart right here. The gray bars are recessions, and then the red circles highlight when the price of oil ends up deviating by, more than 50% from its average trend. Now, of course, there is definitely a large difference between what oil and energy represented to the US GDP back in the 1990s versus now, where it only represents around 4%. Back in the 90s, it represented more than 20%. Realistically, though, with the US now officially banning the import of Russian oil, of course, this is going to have an increased impact on the price of gasoline continuing to go up, and chances are we're going to see high oil prices for probably at least the next 6 months. That's at least what I'm thinking at this point based on the data we have available. Obviously, though, for American oil and energy companies like Exxon, Chevron, and others, this is actually going to be a good thing because it'll lead to increased cash flows, and therefore these companies are probably going to be in an even better position to increase dividend payments over the next year. In fact, we've already seen the stock market taking a liking to the sector as a whole, with the S&P 500 energy sector up over 30% year to date, while the rest of the market is basically bleeding. So anyways, all of this to say that this is all culminating right after a period of, well, somewhat artificial market expansion over the past 2 years and extremely high levels of inflation. So the idea of a potential recession that could last a longer period of time is definitely something that as investors we do need to consider and understand the implications of, especially with the Fed now entering into a period where they're also going to be hiking up the underlying interest rates. And the fact that the S&P 500 as well as the NASDAQ index are now so heavily weighted towards tech doesn't help with overall market movement at all. All right, so like I mentioned earlier, I'm definitely down heavily on many of my tech tech positions: Facebook, Shopify, Amazon, PayPal. These are all positions that, it is tempting to just sell everything and go back into Bitcoin, or sell everything and go to gold. But I got into these positions for a reason, and again, I'm looking to ride out their continued growth as a company over the next 10 years or so. So just selling everything and panic selling right now isn't something that I believe in, and I want to continue watching the market and watching each one of these companies, as I do believe if they do continue selling off, which is very much a possibility, they will enter into a period where we're seeing value in these tech stocks. Even though that sounds insane, there will be a period where these become value positions, and at that point I'm going to be further bolstering my position again for a 10-15 year hold on most of these companies. Now, with that said, recently we have seen famous investors like Warren Buffett significantly increase their stake in American energy and oil companies, and also famous hedge fund manager Ray Dalio bolstering his position in consumer defensive companies like Coca-Cola or Procter & Gamble, and reducing his overall position in the S&P 500, which is kind of telling as to where these individuals think the market is going to be heading over the next couple of years, where bolstering their position in energy and defensive consumables is something that typically during recessions is going to create a higher return on investment. Tech is basically one of the worst sectors overall during a recession, as they usually command higher price to earnings valuations. So considering the data and the current state of the market where it's at right now, well, it's very possible that in the shorter term we are going to continue seeing tech stocks specifically, but then therefore also the broad market continuing to see bearish movements, as like we said earlier, tech represents such a large portion of the current US stock market. Is this going to translate over into a longer term recession? That's something that ultimately no one really knows at this point, but is definitely not out of the question. I periodically speak about dollar cost averaging into broad market indexes, and this isn't something I'm changing my views on whatsoever. However, right now, considering the fact that I already have a large portion of my overall stock portfolio concentrated towards tech, well, I'm actually kind of waiting on the sidelines right now with additional cash ready to invest into opportunities once I do end up seeing the market stabilize. And that could be over the next couple of months. It's definitely yet to be determined at this point. I'm also concentrating a lot more on just focusing on increasing my income and investing into real estate investments where I'm able to really increase their overall market value. I'm also accumulating a lot more Bitcoin over the past couple of months, and it's something I'm going to continue doing over the foreseeable future into 2023 and 2024. It is in moments like these though where it's important to kind of reevaluate your overall portfolio, whether it be stocks, crypto, real estate, and all of these together, where you need to ask yourself, does this represent my overall risk tolerance as well as investor profile? And something that I periodically again will bring up on the channel, because it's very important to reassess your investor profile and the investments that you have actively in your portfolio. So I really hope you enjoyed today's video. If you did, make sure to smash the like button and comment down below. Do you think we're going to be seeing a longer term recession right now or not? And if you want to learn more about stock market investing, but then also real estate, personal finance, make sure to subscribe to the channel, hit the bell button, and don't forget to get your 5+1 free stocks with Moomoo using my link down in the description. On that note, thanks a lot for watching, and I'll see you in the next one.